Hello traders everywhere, Jeremy Lutz coming from the digital studios of Market Club. And stocks soared on Friday, culminating with the Dow having its best trading day since November in 2020. But was this bounce back at the end of a volatile week, the end to a wild ride, or is there more pain on the horizon? As we usually do on a Friday, we'll start with the S&P 500. After having back-to-back weekly losses, it was able to get a weekly gain with the price action on Thursday and Friday, ending the week at 4,384.65, up at 0.8%, with a chart analysis score negative 75. So overall, we're still in a long-term downtrend for the S&P 500. Key level to watch moving forward will be 4,509.03. A move above that level would give us a red weekly trade triangle, indicating a move back to a sidelines position. Take a look at the dollar index, continuing to move higher, trading at 96.53, up almost 0.5% on the week, with a chart analysis score of plus 90, indicating that we're still in a long-term uptrend for the U.S. dollar. Key level to watch should be 95.39. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the U.S. dollar. Take a look at the Dow Jones. Did give us a new red weekly trade triangle earlier in the week at 33,976.18. Pushing the chart analysis score down to negative 75, indicating that we're now in a long-term downtrend. Even with his best trading day since November 2020, it was unable to get in the positive territory for the week, just barely under in negative territory, closed trading at 34,058.75. Key level to watch would be 35,824.28. A move above that level would give a green weekly trade triangle, indicating a move back to a long position for the Dow. Or when I talk about more pain on the horizon, we can't forget that the NASDAQ, will turn our simple moving averages here, as we talked about last week, is still staring that death cross in the face that it has moved but well below, with the 50-day moving average sitting at 14,543.41, while a 200-day moving average sits at 14,739.71. So we are still below that level and looks to be heading lower. And don't forget that the NASDAQ is in correction territory, being down more than 10% from its record high, which the S&P 500 also flirted with earlier in the week. But we'll take these off, we'll turn them off, change back to a weekly chart here. As you see, closed trading at 13,694.62, up 1.08% on the week. However, chart analysis score remains negative 75, indicating that we're still in a long-term downtrend for the NASDAQ. Key level to watch would be 14,509.56. A move above that level would issue a green weekly trade triangle, indicating a move back to a sidelines position for the NASDAQ. Crude oil switched to the April contract, trading in 91.88, up 1.27% on the week, with a chart analysis score of plus 75, indicating that overall we're still in a long-term uptrend, just coming under some recent daily pressure here. Key level to watch would be 95.64. A move above that level would give a green daily trade triangle, pushing the chart analysis score to plus 100. Moving along to gold. Take a look at that. Down on the week right now, about 0.5%, trading at 1,889.70. The chart analysis score remains plus 85, indicating that overall we're in a long-term uptrend for gold, just coming under some recent daily pressure. Key level to watch should be 1,934. A move above that level would give us a green daily trade triangle, indicating a move back to a long position for gold in the short-term time frame. Back out of here, we'll get Bitcoin coming under some pressure this week. Take a look at it here. We'll change to a daily level. See that we did get a new red weekly trade triangle at 36,264.55, indicating a move back to a long-term downtrend for Bitcoin, with a chart analysis score negative 75. We'll change this back to a weekly level. We can see we're actually down right now, about 2% on the week, trading at 38,998.24. With that, every success. Have a great weekend, and we'll be back next week with a market update.